I am EI avatar of CA Ratan Mundra. GIFT IFSC has emerged as the dominant route for external commercial borrowings in FY26 so far. Between April and December 2025, nearly two-thirds of all ECBs raised by Indian entities were routed through GIFT City. This marks a structural shift in India's cross-border financing landscape, driven by tax efficiency, regulatory clarity, and the growing strength of IFSC banking units. According to RBI data cited in the article, total ECBs raised between April and December 2025 stood at $27.5 billion. Out of this, $18 billion, roughly 65%, was routed through GIFT IFSC. To put that in perspective, GIFT's share was just about 36% in FY25. This is not incremental growth, this is acceleration. Officials and market experts attribute this growth to four structural drivers. First, the expansion of IFSC banking units, both Indian and foreign banks. Second, increasing participation from global financial institutions. Third, a stable and predictable regulatory framework. And fourth, competitive funding costs combined with operational efficiency. Together, these factors are repositioning GIFT as India's onshore-offshore financing hub. As of September 2025, 35 IFSC banking units were operational in GIFT City. Their cumulative assets reach at nearly $100 billion by Q2 FY26. And by December 2025, cumulative ECBs booked through GIFT IFSC stood at $55.7 billion. This is no longer a niche ecosystem. It is becoming a mainstream financing channel. Here lies the key differentiator. When Indian borrowers raise ECBs outside GIFT, they are typically subject to FEMA-linked ECB regulations and withholding tax considerations. However, for entities operating through GIFT IFSC units, fundraising from non-resident lenders may not attract the same regulatory frictions. Additionally, interest paid by GIFT units to non-resident lenders is cited as exempt from Indian tax, reducing or eliminating the need to gross up lender returns. This significantly improves the all-in cost of borrowing. The Union Budget 2026 further strengthened GIFT's appeal by extending the tax holiday for IFSC units to 20 consecutive years out of a 25-year block. This long-term policy certainty gives promoters and treasury teams confidence to plan capital structures over a multi-decade horizon. Another emerging trend is ESG-linked issuance, including green, social, and sustainability-linked bonds. Approximately $16 billion has been raised so far via GIFT through ESG structures. Regulatory recognition of globally accepted taxonomies is giving issuers clarity and investors comfort. This positions GIFT not just as a funding center, but as a sustainable finance platform. Recent examples underline this momentum. Piramal Finance secured a $400 million ECB facility through a consortium of international and Indian banks. Public sector entities such as IFSC and NTPC have also routed ECB arrangements through GIFT. This demonstrates adoption across private and public sector borrowers. For CFOs and treasury teams, this could mean lower all-in borrowing costs, faster execution timelines, and access to global lenders through a domestic hub. For non-resident lenders, improved net yield and regulatory clarity increase participation incentives. For banks and IBUs, higher deal flow deepens liquidity and product sophistication. And for India's external sector, GIFT strengthens domestic financial intermediation while accessing global capital pools. However, execution matters. Tax exemptions depend on structure, documentation, and lender eligibility. Regulatory treatment varies based on instrument and borrower profile. Substance requirements for GIFT units must be carefully maintained, and foreign currency exposure requires disciplined hedging policies. The key takeaway? GIFT IFSC is rapidly becoming India's preferred ECB gateway. But strategic structuring, not assumption, will determine whether the benefits are fully realized. Moonses and Management Consultants LLP, a trusted partner for CES and IFSC excellence, a pioneer in establishing CES and IFSC units within GIFT City and India, delivering end-to-end IFSC setup. Operational support and handling compliances, risk management renowned for deep expertise in regulatory approvals, capital markets, fund management, insurance, finance company, foreign university BAT, and ancillary regulations, and fintech, expertise in customs clearance for aircraft and ship procurement, leasing, GST, DSPF, IFSC, comprehensive support covering registration, reporting, and regulatory transitions, ensuring ring fencing, transparency, and global compliance standards. Join our network, scan the QR codes below to stay connected with us.